for the first time this morning, welcome. You are in listen-only mode. There is a question box on your panel. If you have a question, go ahead and please type it into the panel. I'm going to try to keep my eye on that. It's in my other screen. If I do not answer your question during the session, please feel free to call me afterwards and we can go over it. For those of you who have been with us before, you know that we do record these sessions. I do try to keep it limited to 30 minutes, but sometimes I do go over. We're going to dismiss all my little meetings here. I do go over, and when I do that, feel free, if you need to bump off, go ahead and bump off. Because of the fact that we record them, you can go out to our website and finish listening to the recording. Today I have a lot of information to go over, and I hope it all goes well because I actually had to make things go wrong, and sometimes that's a little harder than it appears, although some days for us it seems like how easy it was to make it go wrong. I'm going to put a little disclaimer out there for those of you watching these videos or participating today. You may watch it and go, oh my gosh, that's me. This is what happened to me. The reason why I'm doing this one particularly is because within the last 2 weeks, I've had 4 or 5 clients call with these issues. So that's why I wanted to go over this because, you know, going out of balance does happen. And it's not that it's common, but people make mistakes. And today I'm going to try to show you how they happen and what we can do to possibly prevent them. Okay, so let's go ahead and get started. The first item that I'm going to start with is the general ledger, because we occasionally do get this phone call where someone prints their balance sheet and they call us up and they say, oh my goodness, my balance sheet is out of balance. So the first thing that I ask is to have the user go ahead and print the trial balance. Now, I apologize, my test data is in very old years, but it's still good test data. So I'm going to go ahead and print a general ledger trial balance report. And when I get to the bottom of this report, you're going to notice that I get a message, the trial balance report is not in balance. My debits do not equal credits. And I don't know about the rest of you, but when I went to school, they told me debits must always equal credits, and it's still true today. So the first thing I tell an end user is, okay, well, what month? And they say, well, it's May. And I said, well, are you sure? So the next thing you have to do is find out, really, was it May that went out of balance, or was it a previous month? So I will have them go back, and I'm going to go to April and do the exact same thing. So step one, prove out the month that we're out of balance. And well, guess what? Look at what we see here. April's out of balance also. So I may not have noticed it till May, but I got to go back and find the exact month that that happened in. So I've got an April out of balance. Now I'm going to go back and I'm going to look at March. And we're going to do this again, and we're going to keep doing it until we find that we're in balance. Well, looky here. Debits equal credits in March. So I go back and I know that April is the month that I have to fix. So I figure out what my dollar amount is, and, you know, quite honestly, you know, the next step can be a little bit challenging if you have a large amount of entries that you post. So right now we know that April is where we went out of balance. So what do I do next? Well, I'm going to come in here and I'm going to print the general ledger detail by source report. See, I'm giving you all my little tricks. So what I'm going to do is I'm going to go back and I'm going to say, okay, I'm going to start with April 1st. And I want to look through to April 30th, and oh my goodness, I got to change that year. Apologize. April 30th, and let's get this back to the 1st here. And I'm going to preview. So this is not hard, but you got to have good eyes. The first source journal that we're going to look at is this one that says AJ. Okay. So what I do is I come down, I find all my AJs, and I say, all right, do my total for this source journal, right down here, do the total for the AJs debits equal credits? Well, yes, they do. So the next source journal on my report are CDs. So I'm going to go through until I find the end of my CDs, which are right here. Do my debits equal credits? Yes, they do. Now I have CR total, debits equal credits, and oh goodness, right here I can see it right here. My IAs, which are inventory adjustments, my debits do not equal credits. So you say in your head, well, how can that happen? Well, guys, sometimes it does. Sometimes we have an out-of-balance journal entry. So then your next thought is, well, why didn't I know about it? Well, guess what? Most of the times we do. What I would normally do next when I have a situation like this is I'm going to go and I'm going to pull those journals. I'm going to pull my register, my inventory adjustment register, and I'm going to look at the daily transaction register to see what it says. Now, what I've done for you is I've actually did it in paperless, so I got it pulled up here, and you're going to notice that right here, that daily transaction register actually printed on there that it was out of balance. Maybe as a user, I just missed it. Gosh, we got so much that we're doing during the day, and we're working so quickly, we may have missed that on the register. And, you know, quite honestly, a lot of times what we have is a prompt also on the screen that'll say one or more journals may be out of balance. So, yeah, we do get a warning, but, yeah, sometimes we do miss that we had that warning. So what do I do to fix this? Well, we do a one-sided journal entry. Now, in your brain, you're saying, now, wait a minute, debits have to equal credits. I'm not supposed to be able to do one-sided journal entries, and the system made a one-sided entry. And, you know, going back to maybe what caused this, a lot of times it's a blip at the workstation. Maybe they had a little baby brownout, or a thunderstorm was coming through, or, you know, all of a sudden our machine went crazy, and, you know, we knew that there was going to be a problem, or, you know, somebody rebooted the server right in the middle of us doing posting our entries. Stuff does happen. They are computers. It is electricity, and, you know, stuff does happen. So how do we fix it? Well, what we're going to do is a one-sided journal entry. So I'm going to come into the general ledger, and I'm going to go into general journal entry. I personally like to use the same source code because of the fact that I want the two to match up when I'm looking at my ledger. That's your prerogative. If you want to use GJ or JE to do this entry, you go right ahead and use whatever you want. Now, I also like to use the same entry number because of the fact that, you know, I want the two to match up when I run my report. Now, you notice I had a little pop-up here. This is because I was playing earlier and I actually deleted that entry, but you normally would not get that pop-up. And in my setup options of General Ledger, I have to track deleted journal entries turned on, and that's why I got that little pop-up. So it actually filled the information in for me, once again, because I played with it earlier and deleted the entry. But what I normally do is I type in to correct an out-of-balance entry. So I know when I go back in and I look at my ledger and I look at my daily general ledger detail report that I had to manually enter this in order to fix the entry. So I'm going to come in here to lines. And because if this is an inventory adjustment, I know that I need it to go to my purchases account here. So that would be my other side. I had a credit to inventory, but I did not have my debit to my purchases account. So I'm going to put in the amount that I'm out of balance, and you'll notice I only have a debit, I don't have a credit. I'm going to click on the Accept button. So let's go ahead and click that. Now, you'll notice I have a button here that's highlighted that says 1. This is the magic button. This is the one that allows me to print and post a one-sided journal entry. If you do not have the security rights to do one-sided entries, you will not get this pop-up. You will not, well, you'll get this pop-up, but you won't see this button that says 1. So Enroll maintenance, the user who's doing this correcting entry has to have the security rights to do one-sided entries. So I'm going to go ahead and click that button. Hey, you'll notice my screen just went back to normal. I'm going to print my journal just by clicking my printer button here, or I could click General Journal right there. Either way, I like shortcuts, so I'm just going to do it straight from the window, and I'm going to click my print. Once I click print, I'm paperless, so it's going to bring this up to my screen, and we're going to see that it's a one-sided entry. And once again, I have that warning, okay? So I'm going to go ahead and go out of there, and I'm going to update my entry. Now, if I go and I print my trial balance report once again for April, let's go ahead and do that. You'll notice that I will be in balance. Yay! We all like in balance. And so there subsequently May will also be in balance. So part of your month-end closing is print the trial balance. Make sure that it is in balance because sometimes something sneaks in there on us and you say, okay, wait, how can it sneak in there? If I'm working in May now, how could all of a sudden April go out of balance? Well, if we're not closing, doing our period ends, keep in mind our users can post to a prior period. Now, we are a multi-period product, meaning that we can leave our periods open and we can post into what the system would consider a future period, but by not doing period ends, it also leaves you open to people posting into a prior period and possibly accidentally throwing you out of balance. Just wanted to mention that. Okay, that was general ledger. Let's talk about accounts receivable. Once again, part of your month-end process is matching or balancing your receivables to your general ledger. Now, you've heard me say this a million times. I kind of jump up and down about it. We are all taught in school to print the aging report. I want to teach you to print the AR trial balance report. Why? Because the AR trial balance report is the one that is designed to match to the general ledger. Why? Because this report uses posting date to gather its data. So in other words, if I have made a boo-boo and I have accidentally put a invoice date that has an invoice date of 1 month and a posting date of another month, my aging's not going to match because the aging report uses the invoice date to gather the data. So the very first report that I want you to use to balance is the AR trial balance report. So I'm going to go ahead and I'm going to preview this report here. And I'm going to get ourselves to the last page. Let's make the font big where normal people can actually read it. I wish I could do that. Well, we can do that to your reports, but wish it was easy as a flick of the button here. So here is our balance. We want to use the invoice balance column on here, not the invoice amount, because the invoice amount does not take into account any payments and so forth. But the invoice balance does. So that is our invoice balance. Now we're going to go back and look at the general ledger. Normally, I would just go to account maintenance or account inquiry, but in my data, I actually have 2 AR accounts, okay? So what I'm going to do, I created a report called AR, has both of my AR accounts, and I'm going to pull up May, all right? So I'm going to preview this, and this report is telling me that my balance is 697,006. Whoa, wait a minute, that's different. My trial balance report shows me 699. So I already know I'm out of balance. My goodness, how can that happen? Well, we get that phone call and it says, okay, we're out of balance. What do we do? Well, the very first thing that I always tell our users to do is to go back and check to make sure that there's the daily transaction registers are all updated, which of course everybody assures us, oh yes, we know that they are, until they come in here and they go to daily transaction register. We hit the print button, and guess what? Bada bing, there we have a daily transaction register from May 10th that didn't get posted. Now in our minds we're saying, how could this happen? I've done 50 daily transaction registers since this, this was posted. Okay, keep in mind, when we do a cash receipt or invoice data entry or whatever, it's a process. It prints the sales journal, and then it prompts you for the daily transaction register. It prints the cash receipts journal, then it prompts you for the daily transaction register. If you say no, do not post that daily transaction register, that baby's going to sit right down in there until you go physically click on daily transaction register and print it. It will not automatically post the next time you go to do a process, and it's not going to pick up all the ones that are out there. So you could have a stranded, as I call it, daily transaction register out there and not even realize it. It happens all the time. Once again, we're working fast, we're clicking, someone's interrupting or whatever, and I accidentally click no to that daily transaction register when I meant to click yes. And the next thing I know, I have an out of balance condition. Okay, so now if I check my report against my general ledger, so I'm going to go ahead and pull this report back up again, just so we can prove to ourselves that we're going to be in balance. So I'm going to go ahead and do that. Come here to the very end. There's my 699. We're going to go to the general ledger. And I'm going to, once again, pull that report because I have two AR accounts because of my divisions. Oh, let's go ahead and do the predefined one that I've created. And here we're going to preview this. And, oops, sorry, I pulled the wrong month. That was a little scary for a second, huh? Even my stomach did a little flip-flop. Like, whoa, wait a minute. Okay, so let's go here. And there's my 699. So now I'm in balance. So you say, okay, so that's great. I'm glad we're in balance, but, my accountant, he's kind of a stickler, and, I want to know, I really want to use that aging report of mine, okay? Can't I still use that? Sure you can. So the next step is going to be, now we're going to run the aging report, and we're going to compare it, okay? So here I am at 5/31. I'm going to preview that, and my aging report, let's get it nice and big, go to the very end, shows me that I have 702. Well, I already know I'm out of balance, right? Because my trial balance report shows 699, my aging report shows me 702. So what do? Well, depending on how big this report is, for me this is pretty easy. I've got 2 pages. For those of you that have 30 or 40 pages, it's a little bit tougher. So guess what? It's a tick and tie situation. So, okay, let's go back to why. How can this go out of balance? Well, remember we talked about the posting date versus invoice date. This aging report uses the invoice date. So if I accidentally, let's say at the beginning of May, I put invoices in that were dated on 4/30, but I used a posting date or a transaction date, if you'd like to call it that, of 5/1. It's going to show up on my aging report on 4/30, but it's going to show up in my ledger as a 5/1. Okay, so the posting date posts over to the general ledger. The invoice date is what the AR aging uses. It's just one of those things I want to, get in your mind. So what do I have to do? Well, I'm going to, like I said, I'm going to have to tick and tie. Tick and tie, meaning what does that mean? That means I'm going to take the balance for each one of these customers, and I'm going to check it against my trial. So let's open up my trial again. And once again, like I said, it can be very, a lot. Actually, I'm going to put them side by side. A lot of stuff going on in here if you have a very, very large aging and a large trial. So let me make this smaller. So what I would literally do is I would start ticking and tying my balances. So 5732, 5732, then I got 7377, 7377, And then I've got, here's my Breslin here. What does Breslin show me? Breslin is 11/8/28, and Breslin is 11/8/28. And then I've got green tree. Whoa, wait a minute. Green, brown. Where's brown? Why don't I see brown on here? I've got brown on my aging, but I don't have brown on my trial. So what am I going to do? All right, let's go back. We're going to take a look at brown and see what's going on. Why did brown not show up on my trial? So I'm going to go to customer maintenance, and I'm going to bring up Brown Corporation. I'm going to go to my invoice tab. Now, a lot of you like to use the transaction tab. You can do that. I personally prefer the invoice tab because I like it segregating down here. So my invoice date is 5/31, so that's why it showed up on my aging, but oh my goodness, look at that. My transaction date was 6/1. That's why it didn't show up on my trial. It's because trial uses that posting date. It's not going to pull that until I run that trial balance report for June. Okay? Now, what do I do? Well, you have a couple choices. If it's, in the middle of the year, you could probably go, it doesn't really matter. It's just going to get caught up next month. I'll just leave it alone. A lot of us can't do that. It's against our inner, policy to leave those two out of balance. Now, ledger-wise, we have revenue now in a future month. So we probably want to do a journal entry. Now, some of us want to actually fix the invoice. We're going to talk about that when we do the payables, but we're going to talk about, hey, we could do it we could fix it as a journal entry. So I can come in here and I can go to General Journal Entry, and here comes the lecture. Guess what? AR and AP are protected accounts, meaning we normally don't like to do journal entries to them because everything that affects them should come from those particular modules rather than the general ledger. And a lot of times we have out of balance conditions because our accountants have said, well, let's just do a journal entry. And that's another one of the things that I research when we have an out of balance situation is I start looking for journal entries to see if somebody said, hey, you need to write off this bad debt. And rather than adjusting the customers, they had you do a journal entry, and now our receivables don't match to our ledger. So keep that in mind when you do journal entries. Note it, remember it, know that you did it. But in this situation, I'm going to go ahead and do a journal entry, and I'm going to put a reversing date of the next month because I want to put it into May and I want to get it out of June. So I'm just going to say, to record invoice in correct month. And so what I would do is, I would hit my AR account, for the dollar amount that I'm out, and then I would hit my revenue account for the dollar amount that I am out, okay? And it's going to reverse itself in June. Now that's if, usually I would probably say do this at year end. Normally during the year, I would say let it go because it's going to fix itself the next month. Now, that's option number one of how to fix it, doing a journal entry. Option number two would be to reverse it exactly how it was put in. Okay, so we would do an invoice adjustment. We would come in, so get the journal entry out of your mind. This is option number two. You would come in here into invoice data entry, and you would put your invoice in using the posting dates and everything exactly the way that we had seen it previously. So it was this invoice. It says invoice is already used. Would you like to accept? Yes, I would. I would bring up Brown. Invoice exists. Would you like to adjust? Well, yes, I would. So it gives me the dollar amount for my adjustment. Okay. And then I would go to my lines. I would take it to, whatever. I'm just going to pick one because I didn't write it down. I'm going to adjust it down by that dollar amount. And then when I went to post it, okay, when I went to do my sales journal, remember it posted on 6/1, so I'm going to choose that batch, and I would make sure that this was 6/1. So I'm going to reverse it exactly the way that I put it in. Then I would put it in again, but don't use the same invoice number. Put a -A, put a -R. Where we really, really mess ourselves up is by using the same invoice number, okay? So that was option 2. I can adjust my invoice out. What's option 3? A pen. Take your aging report or your trial balance report, write the difference, write what the difference is, why you have a difference, and the fact that you know that it's going to correct the next month. A pen is kind of sometimes my favorite way to correct something because of the fact that we can easily fix it with the exception of year end where we have to have everything accurate because, that's tax return stuff. Okay, now I'm going to move on to accounts payable. Accounts payable, what I'm going to do in this one is I'm actually going to create the mistake. Okay, so it's going to take me a second, but I'm going to create the mistake. So I'm going to go into invoice data entry. And actually, let me do this because I have specific dates that I've been playing with here. So we're going to use 5/26 as our posting date here. I'm going to go into invoice data entry, and I'm going to bring up this vendor. And I'm going to put an invoice in, and once again, maybe I fat fingered it, whatever. It doesn't matter. The invoice is dated 4/30, or maybe I am putting in a 4/30 invoice. Okay, I just got it, so I'm putting it in. I'm going to accept it, and then I'm going to post my register. Everything is normal. Oop, there's my 5/26. Now, for those of you who are watching right now, I'm making a mistake right now, because my invoice is dated in 1 month and my posting date is another month, okay? My posting date is May, my invoice date is April, all right? I'm going to go ahead and post that. So then we run our reports and we know, my trial no longer balances to my ledger. And I know why, because, I made this, McBoo-boo with this invoice date. So what happens next? Well, what happens next is the user tries to correct the problem by reversing it, the invoice back out. So we're going to come in here and we're going to choose that vendor, and we're going to say, well, yeah, it already exists. I know I made a mistake. I'm going to adjust this out. So I'm going to say, minus $100. Yeah, this will be great. This will fix it. So I'm going to go ahead and post it. And we're going to go ahead and print that out and update it. Okay, so now if I go back and I look at that vendor, let's do our daily transaction register because we want to follow through, right? All right, there wasn't one because of the fact that all I did was adjust it down. So now we're going to come in here and I'm going to go to my Anders, and if I did everything, if I didn't do something right. What did oh goodness me, I'm doing things too fast, guys. Okay, let's go back. I'm looking at my paperwork and I'm not looking at what I'm doing. I'm going to start over, okay? So here we are. We have Anders. I'm going to do a new invoice. And see, it even happens to me. But rather than trying to go back and fix that, we're just going to repost everything that we just did. And we're going to print this. I wasn't paying attention. And we've got that wrong posting date. We know it's a wrong posting date, so Now we're going to go ahead, after this is done posting, I'm going to adjust it back out. Okay, so now we're going to do the adjustment again. Adjust that. We're going to say minus 100. Go to our lines, say yes, and I'm going to print that. Okay, so I adjusted it out. And let me look at Anders again, make sure I did it right this time. Okay. All right, so there we go. Okay, so here we have the invoice we put in, the wrong posting date, and then the adjustment, right? So in our minds, everything's hunky-dory. I want to put it in with the correct date now. So I come back in here and I use the, I use the same invoice number, okay, and I adjust it again. It's got my correct date with the $100. Now we saw previously that it was zeroed out, and now I want to make sure when I post this, I use the correct posting date, right? So let's go ahead and print. Here's my adjustment. I'm posting in April. My invoice is dated in April. And I'm going to say yes, yes. So in my mind, I'm like, okay, I put it in with the wrong posting date. I adjusted it out with the wrong posting date. Now I put it back in with the right posting date. So if I go and I check the vendor, here we go. I have my $100 invoice, okay? And I got my adjustments. But if I go to my reports and I look at my aging for the end of May, and I pull up that vendor, well, doggone it, it never works the way it's supposed to when I want it to do it. What I was expecting to see, quite honestly, wait a minute, excuse me. I know what I've done wrong because I looked at May. Let's look at April. Here we go. So if I look at April for this vendor, which is now I've got to post it to the right month, right? And there we go. That's what I was expecting to see right there. $200. Now you notice when I did May, it was correct. But April is showing me $200. Now you say to yourself, well, how can that be? Because when I'm looking at Anders, it's not a $200 invoice. It's a $100 invoice. Here it is, $100. So this is what I'm talking about when I say if you have to adjust out an invoice, adjust it out, but when you put it back in, don't use the same invoice number because it holds on to those transactions for this invoice. And even though we had a different posting date, it still held on to that 426 and it doubled it as of April. And what makes it worse is if you paid it in between, ooh la la, my goodness, it just makes it really hard to fix. So you say, well, what should we do if we do that? Well, if you adjust it out, like I said, once you adjust it out, don't use the same invoice number. one of the things that you can do also, which I would actually highly recommend, is, you know, when you do adjust it out, also adjust that invoice date. So when I come in here and I pull up that invoice number and I want to adjust it, we originally put it in with the 426, but we posted it at 526. If you fix that, then it shouldn't double up on you on your aging. So it's kind of like you got to kind of get rid of that the whole problem. You know, adjust it out, adjust the date. Don't use the same invoice number, and then it won't appear on the report. Okay, so I just adjusted the date. And let's go back to April. And let's pull up that vendor. And you'll notice that that invoice is no longer on here. I remember a minute ago it was on there for 200. But I adjusted the date to 526 to go along with the posting date. So I adjusted the invoice date to mirror the posting date, and it pulled it off of this report. Now, in normal land, I would put in, you know, 566-A and put the invoice in that away. So I know in our minds it gets very confusing when we've messed these dates up. And my standard answer is, you know, reverse it out exactly the way that you put it in. Then and in this case, also adjust the invoice date to match the posting date so it does not show up on that aging report, which is very important because a lot of us, you know, we have to use those aging reports. And then put the invoice back in again with another code, you know, 5666-A, 5666-R, something, anything. You don't even have to put a dash in there, but use a different code. Dates matter in the system. And you know you've got cutoff dates, and you know that you've got situations where you have to have put invoices in for 1 month, you know, APs, you know, especially where we have this issue because you still have invoices coming in after your cutoff. So, you know, if you still want to use the prior month date on the invoice, that's fine, but have a good aging as of a specific point in time where you knew that, yes, these balance, because now that posting is going to go into the future month. So I know that some of this may have been confusing because I did something wild and wacky on that one entry. It was, but it can always be fixed. Just keep that in mind. It can always be fixed. One of the greatest tools to fix it is a pen, because in the future month, if you're in balance, usually I kind of go with the mindset of leave it alone, you know, because a lot of times when we try to fix it, we just make it worse. So, you know, yes, your AP needs to balance, and you just saw ways that it could go out of balance. Yes, AR has the same situation with the posting dates. So whenever you're out of balance, first thing to look for is a daily transaction register that has not been posted. That is one of the things that I do when I do period end. I go to every single module, and I go to the daily transaction register, and I make sure that those are empty. Make sure that you print that trial balance report and that you are in balance. And then otherwise, life should be good. So if you have any questions, I've noticed that nobody's typed anything in today, so I've either went through everything way too fast or you're all nodding your heads going, yeah, I got that. That's happened to us. We know how to fix it now. Either way around it, if you have any questions, give us a call. We'll be happy to work through this with you. I've got some really nice documentation on this. What I would suggest that you do with the documentation that I'm going to send, especially that last one with the AP with the dates, go into a test company and do one. Follow the instructions in the documentation, do one, and see how, you know, how it affects those reports. and then kind of keep that off to the side so that you can take a mental picture of it whenever it happens in real life to you. Otherwise, guys, you have a wonderful, wonderful day. I'm sorry I went a little bit over. I got myself a little lost partway through the AP thing there, but I think I recovered and I was able to show you what I was wanting to show you. So questions, problems, you give us a call, or if you just want to call, just say hi. We're here for you. We will talk to you soon. You have a wonderful day. See you for the next Tech Tuesday. Thanks a lot, everybody. Bye-bye for now.